As the temperatures outside start to heat up, is the real estate market starting to cool down? Hi, this is Andrew with the S2 real estate team of eXp Realty. And here we are. Here we are in May. It is time for our monthly real estate market update. And you know what? In this month's update, we're going to touch on 4 areas that I've gotten more questions about in the last month than anything. And one is, what in the world is going on? Are we in a bubble? Are we heading into a bubble? Are we going to crash? Where is everything at? Because people are getting an indication, or they're feeling that things in the real estate markets are starting to change. Second, we're going to look at home price appreciation. We all know it's gone crazy, but what's it going to do going forward? Right? Is it going to continue the way it is, or are we going to start to see things settle down, or will prices even come down a little bit? And then obviously mortgage rates are a big topic. They've jumped substantially in the past couple of months, and they've continued up in the past month. So we're going to look at mortgage rates, and then lastly, what that means with regards to affordability. And I'm going to try and wrap all that up as quickly as we can for you. So first and foremost, let's take a look at the boom or bust, the bubble or crash. If you've seen any videos I've done in the past, you'll know that I don't think the market is going to crash. And I also don't think that we're currently in a bubble. I know there's people that disagree with me, and that's fine. I openly welcome that. But what I'm trying to do is share with you the latest information based on fact, not just opinion. I'm taking a look at what the numbers are telling us and then sharing that information with you. And a lot of this has come out really in the past couple of years. I'm not going to go, deep into it here, as I've covered that in other videos. But COVID was interesting. I mean, the market was expected to tank when the pandemic hit, and it didn't. It absolutely, as the initial lockdowns were lifted, the market absolutely took off. And you had this massive run up in prices, an almost insatiable demand from prospective buyers out there. And I've been saying all along, the price run up is a result of an imbalance between supply and demand. Supply and demand has been at the core of it. So I want to touch on that just quickly. And in order to do that, let's go back in time. I'm going to share my screen with you here. All right, now what we're looking at here is an article from the New York Times in 1973. Okay, housing boom turns to bust and threatens a crisis. Now, I promise I'm not going to read this whole article. I do want to point out a couple of things. Right here, it says the home building boom is collapsing. Housing starts for this November were off 37% from a high just back in May. But here's a couple of things I want to point out. More houses were built last year than any other year in history, 2.378 million. In 1973, there will only be 2,046,000 new homes, down 14%. This boom to bust decline threatens a crisis for a nation that needs a minimum of 26 million new houses by the end of 1977. So let's take a look at this. We're all the way back in 1973, and there were over 2 million homes a year being built. And they were talking about the fact that we needed to build more in order to head off a housing crisis. Well, let's take a look at the Census Bureau. This is directly from the Census Bureau, and this is from April of this year, 2022. And this is looking at new residential construction. And as of right now, based on the number of building permits being issued, we're at an annual rate of 1.873 million. Okay, where were we at in 1973? And what's the population done between 1973 and now? Okay, so substantially more households have been created since 1973, and we're not back to the level of homes that were being built back then. So there's a lot. I've watched video after video and seen talk after talk about people saying everyone trying to blame the run up in prices on supply and demand is crazy. Maybe we are crazy in saying that, but these numbers aren't lying to us. They are what they are. Okay, and I think it's really important to keep that in perspective. Now, with that in mind, let's look at this slide. This is a slide that you've seen before, but I'm going to, now that we've got some historical context to it, I want to show you this again. This is going back all the way to 1970, and it's looking at the average annual units completed, this line. Okay, these numbers here represent number of homes built every single year. We were just talking 1973. Here we are back in here. And you start looking at that, and then you look at all of the run up that was done. Now look what happened since the market crashed. Where are we at? Look at the number of homes that has been built. So we turn around and we say, well, no wonder we're in trouble, right? There is not enough homes that have been built. The builders were very, very slow to respond. They were decimated during the crash, right? So they were very, very slow to respond. And you're seeing the results here in the market that we've been experiencing. Crunch time came, demand spiked, fueled by record low interest rates, and also by the fact that people had more mobility than they'd ever had before. The work from home phenomenon has taken off, right? And so that's changed things quite a bit. So with that in mind, we've still got a ways to go. According to the most recent report from Realtor.com, even after the number of homes that were built last year, we are still over 5 million homes short to catch up. That's what we need to build just to get back to even and satisfy current demand. Now, a couple of things could change. It doesn't all have to come from the supply side. Demand could come down, obviously, but I just wanted to point that out because it's right here in the numbers. Right. So there's only two places that new inventory is going to come to market. One is new construction and two is resale homes. Now, resale has entered into a new problem, so to speak. When the pandemic hit, the number of homes for sale dropped substantially. Who wanted strangers walking through their home in the middle of a pandemic? And number one. And number two, the way inventory shrank, if you were a homeowner thinking of selling at that time and you were going to put your home up for sale, your biggest fear is, where do I go? If I sell, there's nothing to buy. What in the world am I going to do? So that's going to cause, that causes another problem. So now, though, we have something else to consider. Now, a lot of people refinance in the past couple of years. Now mortgage rates are over 5%, 5.25%. Somewhere right in there. So if you're a homeowner sitting at a rate less than 3% or 3.1%, do you really want to sell and go and buy a new home at 5.5% or 5.25%? So that's going to cause some sellers to decide they don't want to sell. Now, lastly, the other place people were thinking that we were going to get new inventory was foreclosures. I said at the very beginning, we are not going to have a foreclosure crisis. I went through the last one. I dealt with several banks. I processed hundreds of short sales. I know what the banks were thinking. And the truth is, we're not going to. As a matter of fact, right now, foreclosure activity is an all-time low. Right? As I'm showing here, this is the number of foreclosure filing each year. Now, so far in 2022, we're still way down. Yes, I know there was a moratorium in place last year. I know homes weren't foreclosed on. Doesn't matter. No, it doesn't matter. All those homes that went into the moratorium, 92% are out. They're out and they've either didn't need it or they've worked something out with the bank. Those homes are not coming on the market as foreclosures. And foreclosure activity now is at an all-time low. Right, from what we've seen. Remember, foreclosures are a part of every single market, good, bad, or indifferent. Okay, so the other thing to point out here is with this in mind and considering where we are with supply and demand, what's it going to do for home prices? Okay, so here's the latest forecast that has come out as of the quarter one, Q1 2022. They're forecasting appreciation of about 9% this year, and this is an average. But as you can see, this is over 100 different experts surveyed. They're showing that they're all forecasting price appreciation to continue through 2026. So if you're one of those people sitting on the sidelines waiting for prices to go down, I'm not saying that's not going to happen in the area where you are. These are national average numbers. I'm in Frisco, Texas right now. We are not going to see prices decline. There is more and more people moving in, and we are still ridiculously low on inventory. It is creeping up, not only here, but it's creeping up, faster than it was last year across the board, across the nation, but not enough to cause home prices to suddenly go in a different direction. Some markets are going to be different. Real estate is always local, which is why I say if you want to stay up to date on the market right where you are, in the description below this video, there's a link to a market report. The market report will be for Frisco, Texas, but you can put any city or zip code in the search bar at the top of that market report to get the latest information on your specific area. And that way you can see for yourself to have the best information you can specific to your area. But what about mortgage rates, right? They've obviously jumped up. And how far are they going to go? Well, probably not much further. They are still going to rise a little bit, but probably not much further. As a matter of fact, Bill McBride, he writes the Calculated Risk blog. If you're interested, you should check it out. It's a great blog. He's saying based upon the current estimate for the peak Fed funds rate of 3.25 to 4, which is how the Fed is battling inflation, right? He's forecasting that those increases have already been built into the current mortgage rates. He's forecasting the peak somewhere between 5 and 5.7. There is, depending upon what happens on inflation, there is a possibility that rates could go as high as 6%. I've also seen other reports indicate that if inflation does get under control, right, more quickly than is expected, that those 30-year mortgage rates could drop back into 4.5% to 5% range, in the high fours sometime next year. Whether or not that happens, your guess is as good as mine right now. So with that in mind, though, what about affordability? Because it's obvious, if the prices keep going up and mortgage rates have gone up, what is this going to do to affordability? Well, affordability is going to come down, right? But homes today are absolutely less affordable than any time they've been in probably the past decade, but they're not unaffordable. Here's what I mean by looking at this. This is going all the way back to 1990. Now on this chart here, the higher the number, the more affordable homes are. So you can see we've dropped back right now to the historical average. Not anywhere near as affordable as what they were during the distressed years when distressed properties dominated the market, and not as affordable as they've been the last several years. But we're definitely more affordable than we were between 1990 and 2007. So again, just some historical perspective there. And I share this information because it's important to make sure that your decisions are being made based not on someone's guess, not on someone's opinion, but the question I ask you, do I have a relevant market opinion based upon fact? The headlines, they scare people. They don't do anything to necessarily solve. I read an article last week. I saw it. I'm like, where are they getting this information? It was diabolical what was going to happen. It was talking about a huge crash coming. When you read the article, that's what it said. But the article said that's not going to happen. It was the exact opposite of what the headline is. I mean, it was perfect bait and switch. And like I said, I wish they wouldn't do that. So again, as I share this information with you in this market report, again, I'm not trying to convince you of anything one way or the other. And I know that there's plenty of people that will disagree, and that's fine. I just want you to have the information you need to make the best decision for you. So based on everything I've just shared today, what does it look like is going to happen going forward? Or what does it mean for you if you're planning on buying or selling a home? And for the buyers, with the affordability going down, it is going to take buyers out of the market. There will not be as much competition. The days on market is going to extend. Homes are not going to sell to multiple offers in the first weekend everywhere. It's still happening in many markets, but not everywhere. We're seeing definite cooling in Southern California. We've seen hints of cooling in Phoenix. We're definitely not seeing that same level of cooling here in the North Texas market. It's still running very, very hot. But be patient, right? It does mean that it is turning slowly. So depending upon where you are, for sellers, you're going to have to tame your expectations. Homes are still going to appreciate based on the information that we have, right? But obviously that could change. There could be something unforeseen that impacts this. So with that in mind, don't expect your home to sell for multiple offers in that first weekend. It may take a little longer. And instead of getting 20 offers, you may only get 3 or 4. Right? So again, that is going to vary. So hopefully this information in this month's market report helps. If you have additional questions, please don't hesitate to reach out. You can give us a call at 469-296-5230, or always send an email to contact@s2realestateteam.com. And if you want to stay updated on the most recent information, please go ahead, click subscribe to this channel. Go ahead and click that little bell icon and you'll be notified whenever new videos are posted. Until then, hope you have a great week.